Good morning, dear students. After a long break of summer vacation, today we started the online classes. In the online classes, we continued the second chapter, basic accounting terms. Whichever terms in the previous class were left, those are discussed today. Here you see what are those terms which we have discussed. First term was trade receivable. Now here you see trade receivables are those amounts which we have to receive from our customers, from outsiders. Why the outsiders will have to pay to us? Because they have purchased the goods and services on credit from us. That's why they have to pay to us. So whatever the amounts are receivable from outsiders, those amounts are referred as trade receivable. There are two things which are included in trade receivable. One is debtors, the amount of debtors, and another is amount of bill receivables. Next term which we have discussed is the bills payable. Again I will say, bills payables are those figures which we have to pay to the outsiders, which we have to pay to our suppliers, which we have to pay to our creditors. Now the question is, why we have to pay to the outsiders? Answer is because we have purchased the goods and services from the outsiders. Now the payment is to be made. So whatever the amount is payable to the outsiders is known as trade payables. And in trade payable, remember, two things are included. One thing is creditors, another thing is bills payable. Next term which we have discussed today is the cost. See, the question is, what is the cost? Actually, cost is the total amount of expenditure which we have spent to provide the goods and services to our customers. So on the goods and the services, whatever the amount of resources we have spent is the cost. Next one is the voucher. Next term was the voucher. Now the question is, what is voucher? Actually, voucher is a documentary proof. On the basis of it, the transactions are recorded. Before transactions are going to be recorded in the books of accounts, there should be some documentary proof on the basis of which either we have to receive the amount or we have to pay the amount. Next one is the discount. Next term was the discount. This is an important term. Discount is the allowance which is provided, which is given by the seller to the buyer at the time of sale of goods or at the time of receiving the payment from them. Whatever rebate, you may say, whatever discount, whatever allowance or deductions are made in the payment or in the sale of goods, that is known as a discount. Discount is of two types, trade discount and cash discount. Trade discount is given at the time of sale. Cash discount is given by the seller to the buyer at the time of payment. So these were the few of the terms which we have discussed today.